So in this video, I'm going to give you 7 harsh truths about being a crypto investor. Now, once you acknowledge these harsh truths and use them to your advantage, that's when you can become profitable. Okay, so let's dive in.
Harsh truth number 1, the house always wins.
So when I'm referring to the house, I'm referring to any crypto business that is providing a service. That could be centralized exchanges, the founders of coins, VCs like venture capitalists, angel investors, and then you'd have influencers. Influencers that might be running paid courses or doing promotion. Now, you have nothing to worry about. I'm not trying to sell you anything. Maybe just a like and a subscribe. So the richest people in cryptocurrency, so the people in crypto that have made the most wealth would always fall under one of these categories. And I refer all of these people as the house. No matter what the market does, if it goes up, if it goes low, they will continuously make money. So I like to think about it this way. So if we look back in the late 1800s, back in the gold rush, everyone was out digging for gold. But the real winners were the people that were selling the picks and shovels. So maybe something you should consider if you want to make crypto your full-time job.
So harsh truth number 2, the odds are stacked against you.
90% of participants in cryptocurrency lose money. Let's face it, crypto land is the wild, wild west. You're on your own here, pal. There's no one here to save you. If you make one wrong decision, that's on you. Trading is a zero-sum game. For every winning trade that you make, there is someone on the opposite side of that trade that has to lose. So you got to ask yourself, if you want to become a successful trader and beat the market, what makes you so special? What gives you an edge? What puts you in the top 10%?
Harsh truth number 3, be aware of scammers.
Crypto is jam-packed full of scammers. It's basically scammers' wet dream. People trading money over the internet. You'll find scammers everywhere in crypto. So you have to be extra vigilant, double check everything, and don't trust anyone. So the most common crypto scam would be known as a phishing scam. This is where you would receive an email and they will trick you into thinking that there may be MetaMask wallet or Trust wallet or some crypto exchange, and they will ask you to enter your seed phrase. And before you know it, all your crypto, all your funds are drained. Now there's also scammers, then you'll see them in the comments of YouTube videos, or they're all over Twitter. And then you also have DeFi website or crypto websites. They'll get you to log on and connect your wallet. And then because it's a scam website, they'll have what's known as a wallet drainer. So once you click to connect and you accept, they will drain all your crypto from your wallet. So you have to be wise. You have to double check every single website that you click onto. What I like to do, I like to go to verify everything. I like to go onto the official Twitter page just to get the appropriate links.
So harsh truth number 4, tuition fee.
So most people in crypto don't have an edge. So they see crypto as a way to get rich quick. That's why they never end up selling the top, zero or hero. They end up becoming bag holders until the next cycle. Or worse, they sell the bottom. Finding your edge in crypto isn't an easy task. There's just so much to learn. Between Bitcoin and its halving cycles, Ethereum, Solana, smart contracts, there's a wide range of different altcoins that follow different narratives, NFTs, airdrops, technical analysis, how to read charts, how to perform fundamental analysis, and most important, risk management. It usually takes a person 4 years to master the art of cryptocurrency and to become profitable. So the money that you lose in the first 4 years is commonly known as your tuition fee.
Harsh truth number 5, money flow.
So Bitcoin and crypto is a very speculative asset class. Although the tides are changing ever since the Bitcoin and Ethereum spot ETF has been approved, the spot ETFs really give crypto the stamp of approval towards Wall Street. And that is the main reason why I believe that crypto and Bitcoin is here to stay. Once you start your journey in crypto, you'll quickly realize how correlated Bitcoin is to the altcoins. For example, if Bitcoin pumps 10%, usually you see some alts pump 20 to 30%. But this is also true on the red days. If Bitcoin dumps 10%, then you'll see your beloved altcoins dump 20 to 30%. The sole reason why people buy altcoins is that they expect it to outperform Bitcoin. But of course, this comes with higher risk. When in reality, altcoins only outperform Bitcoin towards the end of a bull market. I can't stress enough the importance of the Bitcoin dominance chart. So if Bitcoin isn't having a good day, you can bet sure as shit your altcoins aren't going to do well. Now, you may have a few outliers, of course, but if you look at a longer term time frame, altcoins usually always bleed back to Bitcoin, especially over a 4-year cycle. So since Bitcoin nowadays has a market cap of over $1 trillion, it does take a lot of money to move the price. And don't forget now that the big boys from Wall Street are now involved. So therefore, it's a good idea to pay close attention to global liquidity, macroeconomics, and what the Fed is doing. There's a common saying in the finance space, don't fight the Fed. When the Fed is raising interest rates, this is usually not good for risk on assets like Bitcoin and cryptocurrency, as the Fed is removing liquidity from the economy. It's amazing the direct correlation between Bitcoin and global liquidity. Bitcoin is like a sponge to global liquidity. The higher the global liquidity, the higher the price of Bitcoin.
Harsh truth number 6, portfolio management.
So choosing the right coins for your portfolio can be very similar to being like a kid in a candy store. Most people hold far too many coins. Less is more, trust me. Especially if you're starting off with a portfolio under $10,000. I wouldn't hold more than 5 coins at any given time. The reason being is you don't want to spread your capital too thin. Having too many coins makes it very hard to manage, leads you to make bad decisions, or to not act fast when there's a sudden change in market structure. Let's say if you had a portfolio between 10 to 100,000, then I'd say, okay, maybe you should hold 10 coins in your portfolio. But even at 10 coins, I probably would just cap it at that. You should never get married to your altcoins. You should always be willing to change, sell, if you see something that is showing better relative strength. New shiny coins tend to outperform older coins, especially in a bull run. It's because they gain lots more of attention. And crypto is all about attention. Also, they have less bag holders from the previous cycle that are willing to sell just at break even. So the day you buy a coin is the day you write down in your journal at what point in time do you plan on selling it. You should write down your take profit points and maybe constantly evaluate it and always just get rid of it if you notice that it's just losing momentum. You should always cut your losers early. Swallow your pride and don't be ashamed that if you're selling at a loss, even if you're down like 15-20%. As the saying goes, cut your losers early and let your winners ride. And you should always take profits into Bitcoin because Bitcoin is the only cryptocurrency that I can see that has long-lasting potential. You should always seek higher risk at the start of a bull market and then de-risk as towards the end of the bull market, not the other way around.
So harsh truth number 7, the wealth effect.
So any fool can make money in a bull market. But the biggest problem is holding on to that money, not getting too greedy. It's an emotional roller coaster. Trust me, I have been there. So the wealth effect is a behavioral economic theory suggesting that people spend more as their portfolio rises. The idea is that investors feel more confident and financially secure once their portfolio rises. At this point, this is where investors seek higher risk because they get greedy. And they justify their behavior because they've already made loads of money in cryptocurrency. And because it's free money, why not risk it? I have nothing to lose. This behavior will lead to a debt spiral and will cause you to seek even higher risk just to make back the gains that you've already lost. That's why we see most of the gains at the very end of the bull market, aka blow off top. And that's why we see a lot of people flexing towards the end of a bull market. That's why we see NFTs popping off. People spend money on supercars, luxury items like Rolexes and jewelry. Crypto is fucked up. It can easily alter your perception of money. I could easily lose $1,000 on a shitcoin and I could just shrug it off and say, oh, that's just part of the game. and then 2 days later I get a parking ticket for 120 bucks, I'd be absolutely devastated. So that's why we should always remember the famous quote from Warren Buffett. Always be greedy when people are fearful, and be fearful when people are greedy. And always, 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 always remember to take profits. So there you have it, folks. That is your 7 harsh truths of being a crypto investor. If you can think of any more, please put them down in the comments below. I will sure to check them out. So I have plenty more educational videos planned for you coming up very, very soon. So I kindly ask you to subscribe, and if you got value out of this one, please go down, smash up the like button, and I will see you in the next video.